We have A. Donahue Baker on the call, and you got to keep that A in front of his name because that's how you're going to find him on his social media accounts. So I'll make sure to have those links in the show notes. But I think you can find most of your content, and I think there's quite a bit of resources by going to his website, bankmoneyav.com or moneyav.com. Is that right?
That's it. Bankmoneyav.com is our banking platform, and it's going to roll out all the great services and products that we have for people. And then our regular website, which has been up for a number of years, is moneyav.com, which has a tremendous amount of resources, access to capital, and a whole bunch of other things as well. We'll talk about.
So, yeah. So, you mentioned right off the bat there that, I mean, we're talking about a wealth building platform, right? That you're building out to help people develop that generational wealth.
That's the key.
Great. Well, let's go down that road first. A lot of what we're going to be talking about today, whether it's money management, CPA, I typically have found that this career that you've chosen is usually accidental. How did you manage to find your way to this?
It definitely is accidental. I actually started in the music industry of all places. I'm actually a Grammy-nominated music producer, right? And I started in the music industry. I had a label deal on Sony Music, one of the biggest labels in the world, and I got dropped. And I was forced to reinvent myself, and no other way to do it better than real estate. And I stumbled on real estate, started to develop this passive stream of income, and that led to just owning a portfolio of over 500 units. And that's where I am today. And that passive stream of income, every single transaction, every single deal, there was a bank in place that allowed me to leverage their funds through financing and build my wealth. And that's why I said, you know what, I need to get on that side of the game. And that's kind of how I stumbled into what I'm doing today.
Sure. So you let's dive into that a little bit. You mentioned you have 500 units today. Where did you get started? Did you start with single family properties, or how did it begin?
My very first unit was a duplex. I lived in one side and rented out the other. And the rent from that side that I rented out pretty much covered the mortgage completely. I mean, I paid about $200 a month, but this was in Atlanta. And I also had a great 6-figure job. So I was literally living rent-free those years. And it forced me to realize that, if I can replicate this, I can pretty much double my income, the income that I work for, right? And that's why I started on accumulating these units. And I set a goal for myself. The goal was I needed to double the number of units I owned every single year. So that first year I had a duplex, lived in one side, rented out the other. And then the next year I bought a fourplex, right? And I didn't live in the fourplex, but that provided so much residual income that I really began to accelerate my savings, and it accelerated the process of investing in more properties.
Sure. That's always such a great way to start out, especially with the duplex, and for, depending on the state. I mean, some people can even take advantage of that first time home buyer. If you live in a unit, up to 4 units, at least in my state. Yeah.
Yeah. What state are you in, Jack?
Minnesota.
Oh, you're in Minnesota. Okay. Well, I'm in New Jersey, but at the time I did it in Georgia. So I used my very first property was the FHA. The only prerequisite of that is that you have to live in the property. So you have to be an owner occupant. So, but I think, today they call it house hacking. I think it's one of the best ways that people can jump into real estate. And statistics have shown this, that if you make your very first purchase, instead of getting the dream home, if you make your very first purchase a multifamily where you live in one side and rent out the other, statistics have shown that you're more likely to become a millionaire or have a net worth of over $1 million. So I love that strategy for people that are looking to, start in real estate, particularly young people, right? People like in their early 20s that are just starting out in careers where your expenses are low. That's the time you really want to do it, because your expenses are super low. So imagine living rent free, and all the money that you get when you're earning, that you go to work for, the W-2 money, that goes strictly to investments. And it, because this days, like my parents, my dad, he worked for Merck Pharmaceutical, the pharmaceutical company, for 30 years, right? That is unheard of. Like even when I was growing up, I was like, how when he retired, I was like, how does, you can't work for one company for 30 years in this day and age. That's such a rarity. It's an anomaly. Mm-hmm. So we have to constantly be thinking of ways in which we can supplement our income. And, I'm also a professor at Morehouse College in Atlanta, and I talk a lot to young people, 20-year-olds, 21-year-olds, and they're a different breed. They don't want to have a career and work for one person for 30 years and then retire. They don't want to do that, right? They want it now. They want to impact. They want to be entrepreneurs of some sort. So I just think that, it's a different mindset, and real estate is an awesome way to start that journey.
Well, you mentioned a couple times, like early on here now, regarding how to leverage the banks to help make you wealthy. How did you start establishing those banking relationships? We have a lot of newer real estate investors listening to this program, and that always seems to be a mind block or a hurdle for them.
Well, the way that I did it, number one, was rely on my W-2 income. Like I said, I actually had a job, and I just bought a multifamily, lived in it one side and rented out the other. While if you're out there, if you're a young person and you have W-2 income, you have a job, you're especially if you're making a really great salary. I was just, as a CPA, I was making six figures, and I was just blessed to be in a city that, paid really well for my talents, right? So I leveraged my W-2 income to basically loans. And the trade-off was that I would purchase properties. Like I said, I bought the 4-unit. The year after the 4-unit, I bought a 6-unit. I would just get these loans. And because every single year I made more money from rental income than the last, it was easier to get the loans. However, I hit a snag about maybe my 6th or 7th mortgage. No matter how good my credit was, no matter how good the underlying asset was, banks did not want to continue to lend me money. So I had to think of alternative ways, creative ways to get money to build my rental portfolio. And that's when I came across business credit, setting up completely separate legal entities, and then leveraging those legal entities to get more and more credit, right? More and more opportunities to leverage. And that's what our bank does. We help so many people do just that. In fact, for every LLC that you have, we give you at least $50,000 of business credit that is not attached to your personal credit profile. So that allows you to at least get $50,000 to prove the concept of a business, or maybe get your first rental property under your business. There's many of different options and alternatives that gives you, but it's really understanding the power of the LLC. And a lot of people overlook that. A lot of people know how to, go to LegalZoom, set up an LLC, or maybe go to the Secretary of State and set up an LLC. But the vast majority of entrepreneurs, they don't leverage their business credit. What they do is they leverage their personal credit. And because 90% of businesses fail over the course of 5 years, what you have is a lot of stress on people's personal credit. And they put their families in jeopardy, their homes in jeopardy, their vehicles, their personal assets. All of it comes into jeopardy. And that's what we try to avoid. We try to tell people, look, there's a safer way to do it. And, whether you agree with his politics or not, one of the people that have really showed an example of that is Donald Trump, right? Donald Trump has over 500 LLCs. And the question is, why does one man need over 500 LLCs? Well, it's really about leverage, right? He's found this vehicle with his attorneys and his legal staff, how to leverage under those LLCs. Now, we know in 1991, he filed for bankruptcies. Actually, we know 4 other times he's filed for bankruptcies. But when he filed for bankruptcy in 1991, the very same week he filed for bankruptcy, he opened up 4 brand new LLCs. So, and those LLCs went on to get leverage for millions and millions of dollars. So that, all of that being said, there's a system, there's a language of money that we need to understand how to tap into so that we could have the capital we need to make the investments we need to acquire wealth.
Mm-hmm. Yeah, that's really interesting. So that, you bring up Donald Trump, but I mean, they've also found that system to establish that generational wealth that we were talking about earlier.
Yes.
So I know that
Absolutely.
You have, I think you call it 6 levels of building generational wealth. Can you talk a little bit about that?
Mm-hmm. Absolutely. So one of the things is at our fintech bank, Money Avenue, we basically came up with 6 levels that we would like to bring people through so that they can ultimately build generational wealth. And even before we get to the 6 levels, it's really looking at where we are as the vast majority of Americans. The vast majority of Americans are living paycheck to paycheck, and we're in debt. And at Money Avenue, what we do is we call that the cellar dwellers, right? The cellar dwellers is mainly because they're the ones that are really supporting the economy. They're living paycheck to paycheck. Those are the workers. There's nothing wrong with that, but we need to be able to understand the language of money and what you need to do to position yourself to leverage debt, right? That's the key. Whatever wealth that you're looking to build, there's going to be some component of wealth. Now, there's schools of thought, people like Dave Ramsey that believe in you should have no debt. It's very possible to acquire and build wealth with no debt, but it's slower, right? So understand, and the caveat is we use debt to accelerate. And when we use debt safely. That's the key. So I'll jump right in and tell you the 6 levels, right? The cellar dweller position is really getting out of debt, stop living paycheck to paycheck. In order to do that at the cellar dweller level, you need to focus on what we call level 1. At the level 1 level, it's called being a thousandaire. And the reason why we say use the term a thousandaire, the threshold is just making $100,000 annually. You can do that on a W-2. You can actually, we have programs. We are affiliated with a startup that they will actually pay you 3 months training. They will pay you, give you a job, making at least $100,000 a year if you're accepted into this program. We're also affiliated with another company that will hire you, or they're all training, but they'll give you a salary if you're willing to work and do certain things. It's called Professional Logistics is our sister company. I'm actually on the board of that company as well. But they give you a CDL, a truck driver's license, and they'll guarantee you a job or an opportunity to make money, and you do that as a side hustle, right? So level 1 is really just getting to a level where you're not living paycheck to paycheck, you're not saddled in debt. That's so important. That's really what we try to do. And when you come into Money Ave, we give you a whole bunch of financial literacy and financial education to help you get to that thousandaire level, right? Which is key. So once you get to level 1, become a thousandaire, the next level is level 2. The focus of level 2 is living the rent-free lifestyle. We spoke earlier about, how I did it, buying the duplex. The whole thing is if you could live the rent-free lifestyle, meaning that Americans, their number 1 expense is either mortgage or rent. If you can put yourself in a position where you're living rent-free, meaning you have a tenant that pays your mortgage and pays your rent, you're living the rent-free lifestyle. Chances are you're 70% more likely to become a millionaire, possibly even higher. So that's really the focus of level 2. Level 3 is where the fun really begins and where we really start to build wealth after, you have this base level of income. It's bringing your personal credit score to 720, locking it. And once you lock it, what we'll ask you to do is set up LLCs and live exclusively through your LLCs. And if you do that, that's the point where, we're able to get you at least $50,000 of business credit that is not attached to your personal credit, so you can fund your business, so that you can prove the concept of your business. The whole idea is to create more entrepreneurs, create more real estate developers, create more creatives, people that are in control and have a passion to work their business, right? You need at least 50,000. Just about every business out there, you need at least some seed money. This is a perfect way to get it. Level 4 it sounds crass a little bit, but it's to literally go out and get $1 million in debt, right? And most people, when I say that, they think consumer debt, vacation, cars. That's not what I'm talking about. What I'm talking about is we want to show you how to leverage. So you get $1 million, you go out there and get $1 million in good debt. You get mortgages, you get investment in a business that will pay you to have that debt. Prime example is I purchased apartment buildings. I purchased the last apartment building that I purchased for $5.6 million. There's over 100 tenants in that apartment building. Every month, I make at least $50,000 to $60,000 just on that initial investment. In addition to that, it's a trade-off. So the more debt, like the more acquisitions I make, the more my income goes up. So that's what I say when I say go out and get $1 million in debt. That should be your focus at level 4. At level 5, the millions of debt that you created or the debt that you created turns into equity, right? And that's the process that we bring through. At that level, you should technically become a millionaire on paper, because that's the objective, right? It is to get to a certain point where you definitely, if you're looking to have generational wealth, you have to have at least a net worth of $1 million. And the wealth that you created in levels 5 through 1, at level 6, our final level, gets passed on. So the whole idea at level 6 is we give you the tools to pass on wealth. You can't talk about generational wealth without talking about life insurance. We offer that. We can have a life insurance product. In addition to that, we'll help you set up trusts. We'll help you set up other, maybe a blind trust, irrevocable trust, family trust, number of other things that will help you pass wealth on. I'll tell you an example of what I did for my son, he's 4 years old right now, but when he was 2, what we did was I purchased through a trust, I purchased a 6-unit apartment building in Newark, New Jersey for him. And that building is going to do 2 things for him. That building is going to, number 1, pay for his college education, 15, 20 years down the road from now. If he chooses to go to college, he doesn't want to go to college. It's there for him. Number 2, it's going to put him in a position where when he turns 18, he's going to have some income coming in every single month, as long as we can maintain that property and have quality tenants in there, right? Mm-hmm. So to me, that's the definition of generational wealth. It's what could you do? What sacrifices could you do today that you can pass on to the next generation? So that's a big part of what we do. That's the 6 levels. And I hope it provided some value to someone.
Yeah, no, I think that was a very important process, because I think a lot of people, they have all these aspirational thoughts, but in order to achieve that level or that goal, you need to take a minute and plan it out like you just laid it out. So I hope people were taking notes, because I think that was wealth building 101 you just laid down there. You broke it into these digestible steps that I think people actually have to think about and actually have to plan. I've said more than once, if it's in your head, you're thinking about it, that's a definition of a dream. When you put it down on paper and write it out and plan it out like you just did, that's when it becomes a target. And you want those target actionable steps in order to achieve what you're just talking about.
Absolutely, 100%. And then the other thing too is having people that help you reinforce that, right? Help you reinforce your plan and your target. As you go up to different levels, there's networks that'll help you get there, right? Because we all need this. My dad used to say this all the time. No man is an island. Whatever you want to do, whatever your goals, whatever your dreams are, you're going to need another human, another person to either do business with you, or either to help you build, or to work for you, or whatever it is. We all need people. And that's also another aspect of what we're trying to do, is really build a community, a home for entrepreneurs, creatives, people that really are interested in building generational wealth.
No, you're just alluding to something else that's really important. We were talking about leveraging banks, but it's almost as important to build out that network and leverage other people's talents.
Yes, absolutely. Absolutely. And it's hard, we're in that right now. Like, we're trying to build, but it's hard finding talented people, to be honest with you. It's particularly as a startup. Now, we know about what's going on in Silicon Valley right now. The whole thing is that, the salaries have gotten well above anywhere else in the country, mainly because there's a lack of talent, and it's just supply and demand. So that's one of the reasons why we didn't go to Silicon Valley and open, our startup. We did it based right outside of New York, where we have a great talent pool. We have a great team right now, but as we grow and we scale, it's hard to find new talent. So we're always on the lookout for that. But our company has been growing leaps and bounds. We're actually the 9th fastest growing fintech by Inc. magazine. We've been nominated for that last year. Hopefully, we make the list again this year.
Sure. So, let's talk a little bit about, you're talking about this platform and helping people secure this unsecured credit. I'm guessing that they're primarily credit cards. Would that be fair to say?
Yes. Credit cards are a big part of the process, but as a bank, we also do loans, right? So that would be real estate loans or business lines of credit, where you can use those business lines of credit to grow every single year. Once you've proven the concept of your business, you have 2 years tax returns, you're making revenue, we help you to increase those lines of credit to become bigger. So yes, it does start with credit cards, but it's just not only credit cards, right? And that's really key, because a lot of people, they just think it's all credit cards. That's not the case.
Well, no, I wasn't trying to paint it as a negative. Where people, what I was trying to get at is that you started credit cards because it's a very efficient way to build your business credit.
Yes, definitely. It's the building block, right? So right now I have a $3 million line of credit through my business. That started with credit cards. Like, literally, it started with just getting a $10,000 credit card, and I used that, and it grew from there, right? So there's a process. It's the next step beyond all that is going into banks and getting a line of credit based on what your business can do. And as your revenue gets more and more, the business lines of credit get more and more.
Sure. I'm going to change the subject on you a little bit, because you got me curious, because I know you teach classes in entrepreneurship. So we're gonna change the focus on entrepreneurship just a little bit in the time we have remaining. But I wanted to make sure everybody has your contact information again. Head over to moneyav.com. I'll make sure to have those links in the show notes. And then you're probably, if you're like me, it seems like a lot of my time on social media is being spent on LinkedIn. But I don't know where would they find you on socials?
I'm on all platforms, Jack. People can find me on Instagram. I actually have a YouTube channel too that's always kind of giving advice, right? So one of my best videos is how to become a real estate developer, right? And that's one of the videos that went viral. But I have a YouTube channel. I'm on all platforms: LinkedIn, Facebook, Twitter, wherever if you're on social media, I'm there. I do have a TikTok account, but I haven't done a lot of TikTok videos yet. But but A Donahue Baker is how you can find me personally. I do answer my DMs. I'm probably on Instagram a little bit more because that's where my I teach a lot of young people, and that's where they go to Instagram. So I'm on Instagram a lot, answering DMs and responding, answering questions, and I post every so often. But the bottom line is I try to share as much value and information as possible.
Sure. No, I share your thoughts on TikTok. I don't completely grasp what's going on there, but
it's funny though. It's really funny because it's some great funny videos on TikTok.
Yeah, well, that's probably what I'm afraid of the most. If I got sucked into something like that, you can blow an hour or two when I could be doing something else.
Exactly. But that's social media as a whole, as general. So right. It's across the board. So,
So you teach classes to young people around entrepreneurship. And I think you come with a unique perspective regarding real estate investing and entrepreneurship. And what I've definitely have found is that it's almost like an 80-20 rule. The people that I run into, they almost treat real estate investing as a hobby versus an actual business, and actually seeing it as a pathway to entrepreneurship. What are you seeing in regards to that, and how can people better suit themselves to ensure that they're treating it as an actual business?
Yeah, I think that's a great question because I think I fall into that category. I real estate is a business. Make no ifs, ands, or buts about it. It's a business that could be a hobby, but if you really are looking to build wealth, it's something that you really should be taking some significant portion of your time building, right? So the thing is, when you own really 50 units is the benchmark. When you own 50 units, you need other people. So that is the point in time where, as a hobby, you may be able to self-manage and control your own properties. But when you get to about 50 units, it becomes time to hire a property manager, bringing other people that really do the day-to-day tasks. And when that happens, what it does is free up your time. So now, over the years, real estate is boring to me because I don't really do anything. I have a property manager that handles everything. If I'm not looking to do another acquisition, it's kind of like, what do I do next? So if you have this entrepreneurial spirit in you, you're gonna go to where something else is gonna spark your interest. And that's kind of how I look at the company that we built. Like, I built up a significant real estate portfolio, and in order to help more people, I needed to have access to capital on another level. So why not start a fintech bank, right? And that's basically how it unfolded. But I definitely agree with the analogy that it's a hobby for some, and people don't really view it as a business. But you have to run it like a business. And if you don't run it like a business, what happens is you lose it, right? The people that, one of the biggest deals that I purchased, a $5 million apartment complex, today's worth over 12 million, doubled in value. The reason why I was able, and it was in less than 3 years that we were able to do forced appreciation and capture over $5 million in equity, is because the previous owners ran this business. It was a mom and pop operation, like a hobby. This was in early 2000s. They didn't have a computer system. They didn't have an accounting system. They did their bookkeeping, giving handwritten receipts. That's not how you run a business in the 21st century. You have to leverage technology as well as people, right? You have to have good talent on your staff. make sure that your trade, your plumbers, electrical, things are always going to be wrong, but something's always going to get broken in real estate. And you have to have quality people that can provide this service and reasonable. So that being business, that's you have to know about business. And if you can be successful at that, you can be successful at other things, whether it's franchising, whether it's, matter of fact, I used to work at a family office, and I've seen people accumulate high net worths because they understand business, and they always some type of real estate things, right? And that's really something I try to tell the students, that it's like, real estate has a low barrier to entry, meaning that you could get in, anybody can buy a house, right? You could have blemishes on your credit, but if you have the money, you can buy a house. If you have the money and you have poor credit, you can find a partner if you have a great deal. It's so many different ways to get in. So, the barrier to entry being so low, anyone can do real estate. Might not be the same way for another type of business, a startup or something where you have to have some specialized knowledge, but real estate, it's very, it's like you're providing a service, somebody's paying you to provide that service, and you have to develop a profit in there. So you have to buy at the right price, the right location, and making sure you have the right team around you to maintain the asset.
Okay, well, we're well over the 30-minute mark, and before I let you go, though, I wanted to cover two more things. So this could end up being an extended episode. So first of all, I like to give everybody one actionable item. And since you have a lot of experience and teach regarding entrepreneurship, I was hoping you could give us one actionable item our listeners could take away today and implement today to make a difference in their business or their real estate investing. And I thought maybe something around that entrepreneurship would be a great action point.
Sure. So one of the things that an action item that your listeners could take is understand that, it's very important in order to build wealth that you have to have a specific target, more like a SMART goal, right? The number that I love to tell people that they should have is $1.4 million net worth, is because most people view themselves they view $1 million as this number that if I can get to $1 million, I'm good. That's not the case. $1 million today will not be worth $1 million tomorrow. And you'll start to see, what's happening. There's over 16.5 million millionaires in the world. And there's a billionaire that's being created every 48 hours, right? So we know that there's this tremendous amount of wealth that's being created. The takeaway is understand what your plan is going to be. How are you going to get to that 1.4 million, right? It's very easy to me. The road is easy to do it through real estate. And you can do it the fast way or you can do it the slow way. But most people have most of their net worth in their homes. So either you got to figure out a way how you can own multiple homes. And the way that, inflation is going today, real estate is a credible hedge, right? So you can come up with a plan where you can own 2 or 3 homes and you can get that 1.4 million. It's really all about planning and sacrifice, right? Using the multi-family approach, and then the home that you live in, using the FHA approach, get in for 3.5% down. That's really the takeaway. Secure that, and then, scale to 1.4, and then do what you love, right? Once you have at least 2 or 3 properties, and you can say, when those are paid off, I'm going to have that net worth. Find something that you're passionate about and start a business around that, right? Start something that allows you to create generational wealth. It could be podcast, could be a blog, could be, something that you really, really enjoy, and then leverage that into what you're doing and just, create another stream of income. That's my takeaway.
I'm glad you said that. One of that's something that that actually just struck me just now. We hear this we almost get this romantic messaging when it comes to picking a career and us finding our purpose and doing that finding your joy in your work, and the money will come. But if I'm hearing you right, you might be even suggesting get the money in line first and then follow those pursuits after the fact. And real estate would be a great way to do that.
Absolutely. And I'm glad you mentioned that, because the reason why most people don't pursue their dreams is fear, and they're not willing to roll the dice sometimes. So the route that I'm telling you to do is secure your day-to-day first, right? And then once you know that you have your future secured, you will be more apt to take risk. And risk is factored into every equation. You have to be able to invest, and sometimes you have to be able to roll the dice. And one of the things is thinking, when you're thinking about investing, thinking about what inflation, the effects of inflation, or the effects of the value of the dollar over time. When you hold things like real estate, to me, the best way to hedge against inflation is on some asset that you see every single day. Your rents go up every single year. The value of the property go up every single year. So there's a number of different things. I like other hedges, gold, crypto. I'm involved in a little bit of those, but they're a small percentage and portion of my portfolio.
Sure. Well, my last question is, what question do you wish I would have asked you here today?
That's a good one. I think, Jack, first of all, it's a great interview. I think your platform is awesome, and I see what you're doing. I would have loved to have a conversation about the musical instruments that I see in the background, because I'm a Grammy-nominated producer. I love music, and I would love to do a deeper dive into, how long have you been playing, and maybe talk a little bit about music. But I know we only got so much time, so that's the one question.
Yeah, we could definitely chat about that. I could talk your ear off regarding some of that stuff, but and that would lead me down the rabbit hole asking you a ton of questions about the music industry too, because one of my mentors, he was actually in the music industry as well, and he got into real estate investing. So it's always such a fascinating story. I joke a little bit because it seems like 80% of the people I know in real estate investing, and there might be a Venn diagram, they play music, or they're involved in music in some way. They're in the healthcare industry or the IT industry. It seems like there's just a mass of people that have these similar attributes. But I can't thank you enough, Mr. Donahue Baker. This was fantastic. I'm going to make sure to link to your websites. Look for A. Donahue Baker on all the socials. And definitely check out the YouTube channel. I'll make sure to link to that as well. You have an open invitation if you ever want to come back and talk music or the music industry. That would be, I'm always fascinated how people's careers pivot the ways yours obviously has.
Yeah, I would love to, Jack. Anytime you're ready, I would love to talk about that and some of my experiences as well. Lots of names that I'm sure you'll recognize, and the interaction that I had with them. So whenever you're ready, we're ready. Whenever you're ready, we'll jump into that next show.
Okay, sounds great. Well, thank you, sir.